Good morning, everybody. I hope you're all well. I do apologise for the slight delay. I tried, do you know those coffee machines? The really cool ones, not the shit ones, but the cool ones, where you put in the little capsule and it froths up the milk for you, and then it pours out a really good coffee. I pressed the coffee button before I put the capsule in, and I basically made a coffee with a very watered down capsule from last night. So I do apologise, but you know, honesty is the key, so I figured I would just let you know what happened. And I was also eating a wee piece of bacon, courtesy of my old father, so you know, my bad, ladies and gents, but we're here now. We're here now, so just let me get 2021's music album up so I can create a fantastic transition for you. And then once we've done that, we're going to run over a little structure recap. Just remind you guys as to what to look for. Oh, that was a bit loud at my earphones, not sure about you guys. Put that down here. Alright, let's see how we do with this. Boom. How was the transition? Was that okay? Who have we got though? That is the big question. Who is here with us today? Oh yeah, Happy New Year guys! Fuck! I forgot. It's a new year! Happy New Year. Hope we've all had a fantastic holiday period so far. I feel pretty weird looking at a chart, to be honest. It's been a while. But Happy New Year. Hope you had the best one, you know, the best evening. And celebrated the best you could. Incredibly limited, I know. Incredibly limited. Who have we got? Last Killer, hello. Andres, good morning. Reese, how's it going, mate? Esther. Seb, what's happening, buddy? Ross, how's it going, mate? Joe, Jake, Tommy, Hyder, Elwin. Is this Teletubby music? Yes. Sponsored ad, of course. Family. Nadim, Jesse, Oscar. It wasn't a surprise stream, no. No, I did notify everybody on Instagram. But if you're not on Instagram, then it's probably a surprise. Roman's here, Scott's here. Trail riding days, how's it going? Sonu, how's it going, buddy? Oliver, what's happening? Mikey boy, how's it going? Pardeep, Will, what's happening? I'm assuming that's you off the golf course, Mikey. It's alright. DJ Matt, I don't know, I wouldn't go that far. I wouldn't go that far. Maybe. Okay, Bitcoin, guys. Okay, Bitcoin. What the fuck? Fucking Bitcoin. I'm obsessed with Bitcoin now. I'm obsessed. I'm only joking, I'm really not. Like, please don't give me a bunch of shit on Bitcoin. I don't care. I'm only joking. Shaky, Happy New Year. Jacob, how's it going, buddy? Right, let me see. Sebastian, you beat me to it. Thank you for doing that. That was what I was going to do. Okay. Right, so today, guys, what we're going to be doing, and I'm going to stop the music. And I'll stop it on my end as well. Because if you can't enjoy it, I won't enjoy it. But we'll stop the music so that we go into serious mode. Alright. Today we're going to go over a little structure recap. Now, everybody knows that I trade structure slightly differently to some, and my way of looking at it is similar but far more conservative in a way that is more rule based, because I think structure, people look at structure in a way that just is very subjective, and it's their personal opinion on what structure is, and I don't think that you should define structure on what a personal opinion is, or at least you should try and avoid it as much as you can, because I think everyone will agree that this is an uptrend. Okay, so it's very, very easy to determine that is an uptrending market, but what you don't realize is that sometimes an uptrend isn't as concrete looking as this, right? It's not as clear. It doesn't, you can't easily identify the highs, and you can't easily identify, the lows. It's not as simple as that. Sometimes you'll see structure and it looks, the exact same as this, but inside each of these legs there's a lot of choppiness. So what you might find is that, structure looks something like this, right? Right? So you see my point, right? It's never just going to be straight up, straight down, straight up, straight down. So what people tend to do is they just look at the chart at the point that is the most obvious before a push up. So they'll say this one, whereas you could have like this little low to the left hand side, and you're not like taking that into consideration. You're just, what if people, the problem people have is what if you buy it from this point? What if you see that it's formed a support down here, just like it has here, moves up and then starts to drive back down again? How do you know that that's the point of the push up? Right? And that's what I'm going to try and talk about a little bit today, because each leg is going to have some form of structure to it. Right? So just like we always prioritize every single time frame, whether it be like weekly, 4 hour, 30 minute, daily as well, we're looking at every single time frame and working out what the direction is, and what the kind of, the larger the time frame is, the larger the priority, and that's the direction that we should really be trading in. Once we strip that back and go down the time frames, we can see all these little micro trends inside there. So that's basically what we're going to talk about. And as I say, if there's any questions, like the same way on the stream, if there's any questions in between, then you just have to ask, and I can backtrack and go over it and stuff like that. But what my plan is today, and what my goal is to achieve from this call, is for people to be able to then go and look at a chart and comfortably identify the direction and the structure of the time frame they're looking at. Okay? Because when you do that, it's just like a tick sheet, right? So you'll do the same thing, and you'll do it on daily, and you'll work out the direction and the structure, and you'll write it down. Tick, done. Okay. You'll do the same on the 4 hour. You'll write it down. You'll tick it off. Perfect, done. You'll do it on the 30 minute. You'll write it down. You'll tick it off. You've worked out the direction. Perfect, done. And what you're doing at that point is you're determining a trading bias. And by determining a trading bias, that means that you can approach the market knowing the direction that you want to trade. And even if the market is moving in the opposite direction to the one you want to trade, you know that based on your rules and your structure and your directional bias, to just wait. You're not going to trade it. Okay? So, aim of the game today is to make sure that everyone leaves understanding how to work out structure, identifying microstructure, and understanding directional bias. Okay? And that way that when you go to the market, you have like a set of rules. Okay? Because as I've said at the start, people are very subjective when it comes to working out structure or just trading in general, right? Trading naturally is pretty subjective, and it all is based on um, personal opinion, I guess. We all learn the same shit, right? We all learn what a candle is. We all learn what a trend is. We all learn fib. We all learn support and resistance. We all learn that shit. But it is a matter of how that individual interprets it, okay? Which is the subjective part. Some people are going to be looking at it one way, and others are going to be looking at it another way. And that is what creates the divide, right? That's why the market moves up and down, okay? Because some people are interpreting sells and others are interpreting buys. And that's based on the same information. So how can we create rules? How can we create, some sort of rules and develop some sort of plan to know that each and every day we're tackling the market the exact same way? And that's the way that I trade structure. That's the way that I look at it. So we're going to do the basics first. Alright, some of you guys are going to be like, oh, for fuck's sake. But there could be some new people here. So it is important that we cover the basics and we just talk about structure and its changes, or I'll show you and I'll ask you. But with that being said, everybody who is here and understands the way that I trade structure already and has a little bit of a background in it, answer in the chat. I want there to be conversation today. I want you guys to be spamming messages. I want you guys to be, answering the questions that I'm asking. I think it's really, really important because I can't teach if I don't know that it makes sense to you. So I'm going to draw out some scenarios. I'm going to ask you some questions. There might be like a 5 to 10 second delay in between me asking and you answering. That's okay, because of the YouTube delay, the streaming delay. But fuck, I wish I got a new chair for Christmas. But that's what we're going to do first, okay? So I'm just going to draw an uptrend. We're off to a flying start, folks. I'm just going to draw an uptrend. And we'll start over here. Okay, so we all agree, uptrending market. What do you guys think of this? If you've seen a chart that looks like this, all right, could you guys tell me, is it bullish or is it bearish? Just want to see the dynamic of this chat at the moment. What do you guys think? Do you believe that this here is still bullish price action, or is it now bearish price action? A lot of people saying bullish, okay. Still bearish. Well, it was never bearish, so I don't know why it would be still bearish. It's either still bullish or now bearish. See RSI first. No, guys, this is black and white, right? No indicators, no fibs, no nothing. Just simple price action. Okay, low has not been taken out, which made the last high. Okay, excellent. Okay, so retest again, guys. I'm asking, guys. I don't need explanations. I'm the one that's teaching. I don't need explanations. I don't need suggestions. I'm just going to ask point blank a question, and I'll give you an answer for each. It's either bullish or bearish. It's very simple. It's very, very simple. That's all I want you to say. That's all I should see in the chat is bullish and bearish. All right. So a lot of people saying bullish, some people saying bearish. The answer is bullish, and the people that have said bearish, I'm very happy you did, because now I can teach you how to trade more rule-based and conservatively when it comes to structure. Okay, so the market is still bullish. All right, the market is still bullish, and I know you guys are going to be sitting going, "No, it's not. It's bearish. It's got a lower low and a lower high. It's fucking bearish, man. It's bearish, Matt. What are you doing? It's not. It's bullish. Let me tell you why. The reason it's still bullish is because when we're trading within a trend, we're seeing a series of higher highs and higher lows, and higher highs and higher lows. Now, we need to identify the highest point of that current uptrending market. That's our job. That's what we have to do. We must identify where the highest point of the trend is. And I think we'll all agree that the highest point of this trend, this current trend right here, is where I've circled, right? That would be considered where the highest point is, right? All agree? I would say so. So because we've identified the highest point, what we must then do is identify where that push came from. Where did that leg originate from? Right? Where did it originate from? We must find the support that formed to create that push up. Okay? And that came from here. Okay? So whilst this may be considered a higher low, right? Whilst a lot of you guys are saying that this is a higher low and this one here is a lower low, that's correct. 100%. Right? 100%. That is right. This is a higher low and this is now a lower low. But this part here is not significant to that uptrend on the left hand side. Okay? Because the low that we want to break is the last significant higher low. And that is the one that created the highest point of the trend. Alright? That's the one that has to break in order to flip that trend. So what that means is that we have to get below this level right here before the trend turns bearish. Now, how many times do you guys see something like this? Alright? And you have this little high, low, lower high, lower low, lower high, trend line, right? And everybody, I know what you guys are doing. Okay, I know what you guys are doing. Get your little Fibonacci, draw it down to the low, 61.8 on the old fib, bang on the trend line. It's time to take sales, ladies and gentlemen. It's time to take some sales. And then what happens is you think you've got the best trade in the world. You're sitting there going, this is the one. Mum, break out the champagne because I'm about to pay off your mortgage. And then what happens is, right? Happens a lot. Happens a lot, let me tell you. And the reason that that's happening is because the structure is still bullish. Price has still respected the last significant higher low. The reason the word significant is in there is because it's the one that means something, right? It's the one that means something to the trend. Okay, this one doesn't mean anything to the trend. Why? Because this high did not breach the highest high. Guys, descending triangle, head and shoulder, all of that shit, irrelevant. This is price action. All of that crap. If I've got anything that I could advise you on, it's forget about all these fancy names, you know, shooting star or ascending triangle or pennant or like a fucking a pennant wedge, a pitching wedge. I don't fucking know. Try and forget all that shit. Leave that in 2020, right? And then come into 2021 and just learn structure, support resistance, candles. That's it. And honestly, you're going to thank me. You're going to thank me for this call. Honestly, and I don't mean that in an arrogant way. I mean that in a genuine way. So many people have, switched from swing trading, or they've come over using all the indicators, all the indicators possible, right? And then they just focus on price action, and then they're like, oh, this is a lot easier than what I thought. and that's it. So this is the idea of structure, right? And this is kind of how it works. And this is why you want to make sure that you're on the right side. And I understand that, look, on occasion, you're going to see this lower high form, this lower low form, and yeah, the structure is not necessarily broken yet, but what does happen is price drops, pulls back, and then goes, right? And you could have been in the trade at this point at the lower high or the break of the low. On occasion, that may happen, but that's like 2 to 3 times out of 10. And I understand that if you do that, and on those occasions you've managed to catch the earlier entry, and then price ends up down here. Okay, fair enough. Like, well done. You got a better risk to reward. You know, you've caught the trade at a higher point. Excellent. But for me, you know, as a trader, I'm not bothered about catching the move at this point to move down. I'm not bothered about catching it at this point to move down. I'm not bothered about catching it as it breaches the low to move down, because the structure at that point is still bullish, and it goes against all of my rules and my plan to trade if the structure is still bullish and I'm trying to take a sell. So what I would much rather do, by not catching this move, I don't need to catch that. I don't need to, right? I honestly do not need to catch a trade in here. I don't mind until we see price down here breaching this low, then pulling back in, and then I can start to look for sells. At that point, I can start to look for sells, all because of this here, breaking the last significant higher low. Okay, guys, I'm a forex trader. I don't trade indexes and all that shit. I don't need to open up an index chart. It's just pound versus yen. That's okay. So let's go again. Might try and trick you guys out. Okay, we'll go with that first. What structure are we in, ladies and gentlemen? Are we bullish or bearish? I don't need anything else apart from the word bullish or bearish. Bearish, yep, well done. Great. You guys are getting it. Fucking yes, man. I love it. Someone says bullish, yeah, fuck. Really? Bullish? Are you sure? Bearish, waiting for retake. Guys, fuck me. Like, can I just ask one question and like get a normal answer? Like, bullish or bearish? That's it. I don't need anything else. Waiting for retest, blah blah blah. Shut up. Answer the question that's being asked of you. See this, see that. See if you can't just answer a simple fucking question. There's no chance you guys are going to make it trading. There's no way. Like a tiny little bit, just information, just small little information. Bullish or bearish? That's it. That's it. If you can't answer that, you don't even need to get it right. Just say bullish or bearish. The answer is bearish. So well done to everyone that said bearish. Why? Because we can identify the uptrend to the left-hand side by looking at the highest point that it got to. Okay. So whilst we've been able to identify the highest point on which we've come to, we can then identify the last significant higher low, which is right here. And we know that as long as price continues to respect that area, we will remain bullish. So all of this information in here, grumpy prick, Happy New Year to you, buddy. All of this information in here isn't really relevant at this moment in time. Okay? It isn't really relevant. We know that price is still bullish, and what we should be continuing to do is look for supports to form, micro trends to break, which we're going to go into shortly, and then start taking the trade to the upside again. Alright? But because price has actually broken that low and formed a new low, we're then flipping bearish. So, my question now is, if we have flipped bearish, so let me draw this circle in again with the highest high, last significant higher low, and we now have a new low, right? So we're now bearish, we've flipped bearish, we now have the lowest point that this downtrend has got to. Where do we have to respect to stay bearish? What do you guys think? So just the same way that to the left hand side, we have to identify the high and find the leg that created that push up. Where are we now? Where do we need to look to find that push? Right? Where's the last significant lower high of the downtrend? There's no such thing as a last significant low. Remember that, Robert. So it's last significant lower high or last significant higher low. Alright? The lows and the highs are just considered the low and the high. They don't need to be the last significant one because it's the only one, right? If this is the highest point, it doesn't have to be the last significant high because it is the highest point, right? So we don't need to call it last significant. Start of the leg that created the new low. Perfect. So we have the new low. What created that push? Right here. So what we now know is that as long as price continues to respect that level, price remains bearish. And that here would be considered the last significant lower high, not just a lower high, because we see lower highs all the time. Alright? But that is the last significant lower high to the downtrend. Because if it breaks, the trend flips. And if it respects it, we continue moving down. Okay? And what we'd be waiting for at that point is something like this to form that new high, that new higher high, which then becomes the highest point of an uptrend, the new uptrend, not this one over here, because this uptrend over here, guys, just so you know, it becomes invalid. This one here becomes invalid for the structure because the trend changed, it flipped. So that one doesn't matter anymore. That one's just going to be used for like support and resistance and stuff, right? That's what that will be used for. But it doesn't actually matter within the trend because this is now the new high because we've transitioned from an uptrend to a downtrend, then back to an uptrend again. So because we've then flipped, what we'd be waiting for is some sort of pullback to potentially, and what tends to happen the majority of the time, is that it will retest the last significant lower high and then continue its drive up. And you can start loading up orders maybe as it forms the support or as it starts to breach the highs. Alright, and that's how structure works. It's fairly simple, to be honest, as long as you always try to remember the last significant lower high, last significant lower low, higher low. I think genuinely, as long as you can get into the habit of just identifying the highs, identifying the lows, and just making sure that you're paying attention to the area that created that push, you're probably going to be on the right side of the market the majority of times. Okay? So now what I want to do is just talk briefly about how to know when to execute the buy, right? Like when to actually take the trade based on the structure, not necessarily on the candles or anything like that, because today's not about the candles, it's more about the structure. But when you start working down the time frames and stuff like that, you'll be able to see that the candles sort of correlate. You'll see like a strong bullish candle correlating with your micro trend, and you'll know that that's the time to buy. But that's all the stuff we do on the live streams anyway, so you're not going to completely miss out. Let me see. Hi, that is the other. end of the last point. The high that is at the other end of the last point of the structure. What time frame is this based off though? This could be based on any time frame. Any time frame. Structure is price action, right? Structure is price action. Price action is what drives the market, and price action occurs on every time frame. For me, and what I'll do at the end is I'll talk about directional bias and how I gather that. If excuse me, if you've seen a Sunday webinar, you'll know. You'll know how to work out directional bias. It's very easy. Like, it's the same process every time. I think there's maybe like 3 or 4 Sunday webinars on the channel. What I do in them is basically how I determine a bias for the new week, and I'll look at the weekly candle. I'll look at the daily time frame, the 4-hour time frame, and then the 30-minute time frame. And those are typically the ones that I'll look at the structure. I just feel like the more time frames you look at, it's too much information. Next candle could bias on the daily. Or, I mean, if you want to come on and teach, if you want to like set up your own stream and maybe teach, then crack on. But this is me teaching, so why don't you just let me do it? Thanks. And if you don't like it and you want to call me names, then might be a new year, guys, but I'll still tell you to fuck off. Okay, so moving on. Now we're going to look at identifying like the micro trend inside the uptrend. So let's just use this leg for example, right? So because we are bullish, and let's say this is the 30-minute chart. Let's just say, I know we're on it, but let's just say this example here is like the 30-minute. Sorry guys, it's the old Scotsman coming out. What I've been doing recently. Oh, I'm gonna cough. Hang on, guys, I'm gonna cough. COVID. Sorry about that. So what I've been doing recently, not so much recently, but paying attention to and talking about more on stream, is the sort of micro trend on the 5-minute. Now, it is a little bit riskier, but at the same time, I think once you can correlate that with the candle itself on the 30-minute time frames, then you have an opportunity. There's a really, really good example on the Instagram page, which came towards the end of the year when we kind of finished up. Where was the trade? It's if you're on the Instagram page, it's the 3rd or the 4th last video. It's the one that says boom 10 seconds. It's that one. That's a really good example of what I'm going to talk about right now. Or you could just go back to the stream and watch it if you want. I'm not sure of the date, but it was just before the end of the year. Show more price action. Oh, you guys want? Okay, you want to see another? All right, fuck it. Why not? Just so everyone gets it. Let's do it the opposite way this time then. Let's do it the opposite way. So let's start from like a downtrend and let's transition from that. So we're going to go something like this, which we can all agree is a downtrending market. Okay. So if this is a downtrending market, what must we do? We must identify the lowest point. Very simple. This here is the lowest point. So if this is the lowest point the market has gotten to in this downtrend on the 30-minute time frame, we must find the leg that created that push. So we can obviously see that just over here there was some resistance formed and price started to drive down. Right? So that's where that leg came from. So we know that as long as price respects this level, we're still bearish. The market moves down again, creates another lower high and a lower low. What happens here? This is the lowest point. This is the leg that created the push. And now we're still bearish. We have to break above this level to flip that trend. Because it's all about impulse correction, impulse correction. So you guys will know that the impulse is bigger than the correction. Okay, so that would be the impulse here. here, here, here. So if we're going to start moving into a buying bias, right? If we're going to flip the trend, we need to find an impulsive leg to the upside to wipe out the impulsive leg to the downside so that we know buyers are in control, right? Because what a lot of people tend to do, and let's be honest, it does happen a lot, is people see the market moving in a downtrend and they've missed the move, right? You could put your hand up if it was you. It used to be me. I used to do the same thing. The market's moving in this downtrend and you've missed it, right? You've missed it. So you see this big move, so what do? You try and buy the low, right? You try and buy the deep, and then it pushes up and you're like, yes, and then it drops again, you're like, ah, shit. So then you buy it again in the hope that it's going to continue moving up. But no, it keeps moving down. It creates a little push, then moves down again, and you try and buy the deep again. And you just keep trying to buy the deep, buy the deep, buy the deep. But what you're doing is you're buying against the trend. And it doesn't work. Alright? It just doesn't work for a retail trader. It just doesn't make sense. Unless you're like taking 0.01s and just constantly do it. Even waiting for candle confirmation, someone said that's not enough. That's not enough. The trend is your friend. That very cliched, but it's very true, right? Because whilst you might have had, let's say you had this little, you had this little bullish candle right here, right? There you go. There's your little bullish candle. There's your candle confirmation. Congratulations. What do you do now? You buy it now? Do you buy it? Do you put your stop loss below the support and your TP up at the previous resistance up here? Is that your trade? Is that the game you're playing? You know, even though there's currently a break and retest happening, we have a low, lower high, lower low coming up to do the retest of this area right here. And then what happened? Down it went. Why did that happen? Why was that candle confirmation not enough? Why was it not enough to continue price moving up? Because the structure is bearish. The trend is bearish. The sellers are overwhelming the buyers. It's very, very simple. So we don't want to get into a buy trade when the sellers are winning the fight over the buyers. Where's that little tool? Where's that little... Is it in... I've got a little tool that you can use to measure. I think it's this one. So let's just measure something like that. Price range, 35 pips. Price range from the impulse, 36 pips. Price range, 35 pips. Price range, 33 pips. Okay, so that's all your impulses. Look at your corrections. Change it to red this time. Look at your corrections. 17 pips, 17 pips, 16 pips. Right? Who's winning the fight? Who's honestly winning that fight? The sellers are winning, so why do you want to get involved in buy trades? Right? We need to see an impulse in the opposite direction. We need to see an impulse for buyers to tell us that they're ready to take over. So how do we identify that? Find an impulse from the buyers. This is what we need to see. We don't need to get involved on this leg. We are not bothered about this leg. This leg here is creating the next move. Alright, so what we're expecting at this point is we're expecting some kind of pullback. Alright, we're expecting some sort of support to form, because what's happened now is the last significant lower high at this white line has been broken with this new higher high. So if this is a new higher high and the trend or the structure has broken, what would we expect? We would expect a higher low. Okay? So we would expect a higher low to form for price to then continue moving up. So what that means is that because we're now bullish, price has to get below the low to flip back bearish. And now what we have is an impulsive leg for the buyers. These should really be green, but you get my point. Now we have an impulsive leg for the buyers. Now what we're looking to see is the correction, which we have here, to form the support, to form the new impulse. And see this impulse here. See this one. This is the one we want to get involved in. We don't need to get involved in the first one. The first one is just to give us the direction, give us the bias, give us the idea of what's going to happen next. Alright? We're then looking to see the next impulse. So what we're going to do at that point is either we're going to start placing some buys from the support formed, or we're going to place buys as we break back above the high, whether that be with breakout trades, whether that be with like a break above. Let's say we get something like this, like a bullish candle breaking above, and then the next one taps in to the resistance over here. This is resistance. It taps in and then flips back bullish, and you're saying, okay, well, perfect, it's flipped back bullish. Here's my lower wick, you know, that formed a support at the resistance. I can take a buy as we flip bullish, like so. Stop loss could be below the support formed down here. TP is going to be up wherever it may be. Or if you're more of a swing trader, then your stop loss can be below what would be then the last significant higher low of the new uptrend. Okay? Because we're now in an uptrend. And what's actually happened is we've created, let me get rid of this here. We've created now a new high of the uptrend. Where did that push come from? Right here. And then there you go. And then what are you starting to see? You're starting to see the buyers overwhelming the sellers. Make sense? Do you guys follow that? Let me know in the chat. I know that was quite a lot to take in. I know that was a lot to take in, but just let me know that you're following and that makes sense to you. Makes sense? Excellent. That's too difficult to understand. Look, I think it's because you're not comfortable with support and resistance yet. So this is a little bit more advanced. This isn't necessarily a basic stream. So I think my recommendation for you would be to go to babypips.com and learn just basic trading. I'll send the link into the chat. So if you're a complete newbie and you don't really understand trading at all, to be honest, if you don't understand support and resistance, if you don't understand candlesticks or anything like that, my recommendation would be babypips.com, learn the basics, and then come back. Okay. But this is pretty basic stuff, so just think about it like that. You know, that's a good thing. This is pretty. Fuck's sake, hang on. Honest to God. Apologies, guys. So yeah, this is pretty basic stuff. So once you kind of learn what trends are and stuff, you look at this and go, like that makes sense. It does, because it is relatively simple. Okay. Will this be recorded? Yes. Yes, this will be recorded. Anyway, I get your old course free. Sorry to ask. My old course free? I don't have a course. I think Luke B is trolling, to be honest. I think he's trolling, so yeah. I'm not going to answer any more questions from Luke B. Understood very well. Excellent. Nice one, mate. Nice one. Why can't we identify such structure on MT4? I mean, I'm sure you can, but MT4 just isn't MT4 just isn't as clean. You know, trading view is very clean. Yeah, I don't know. Yeah, so I would just use trading view. That's the platform I use to analyze, and I execute on MT5. Just answering some questions, guys. Sorry. This will be recorded. Yes. Bitcoin is not a currency. Wicks are bodies. That's too much to go into. I always try and go from the bodies to the wick, and that is defined as the structure. I never usually just use like one line. So, for example, what's the best way to do this? So, for example, here, let's say this was like, let's say I needed this to break. It would look like this. So I would have something like from the bodies up to the wick, like that. So I would have this. Does that make sense? So it's going. I'll zoom in so you can see. So it's never just one, like one line. So price for me would have to break above this whole zone to be considered like a change in structure or like a break. Does that make sense? So I use the whole zone, not just like the body here or the wick. I use both. I don't know what you mean by my old course. I don't have a course. Uh, can you give example on how to trade a ranging market? No, I don't trade ranging markets. So yeah, I can't show you that unfortunately. Is this trading with the banks? I mean, I'm just a little Scottish specky dork trading in a home office, so no. Could you go over it again? No, but it is recorded, Matthew, so you can just watch it back. When are you going to continue with the morning live streams? The 11th, so a week tomorrow. 1 week from tomorrow. There is a way to change candles. You just go into settings, right click, go into settings, and then you can just change it all from there. Okay, so I'm going to move on. I'm going to move on so that you can start to identify how you can maybe take trades down in this area, right? So how do I? Because I want to keep all of this on the chart for now. Maybe I'll delete. I'll delete all of this. Okay. Here we go. Okay. Oh my god, man. I kinda like tolerate this, Ross, because it's the new year, so everyone's trying to learn a new skill and like everyone's new, right? Give it till March. It should be okay. Give it till March. Who's big boys? Just me and my dad. What is success rate as we follow the same? Success rate of what? I don't believe you and I trade the exact same. So I think that's very, yeah, it's a little bit off. Anyway, let's move on, guys. Let's move on. So I'm pretty sure everybody is relatively familiar with the change in structure now, right? So you guys are able to identify the lowest point of trends, the highest point of trends, identifying the leg and stuff like that. And don't worry, because we're going to go onto a live chart soon and find some examples of these things, or you guys could choose a pair and we'll go on and analyze it, something like that. But because we're talking about structure and not so much candles today, right? We're not talking about candles at all. We're just going to pinpoint structure, and what I'm going to talk about is how we can create these sort of buys from support when it's doing the retest. So you can see, let me clean this up a little bit then. We've obviously flipped the structure, right? So this here is the last significant lower high of a downtrending market, right? Very easy. I'm not going to do GJ, Mohammed, just because it's been moving pretty poorly. So I'm not gonna do GJ. I'll do something different, right? I'll do something different. But yeah, so we've created this new high. All right, price is obviously broken above the last significant lower high, and structure has flipped bullish. So what we're anticipating at this point is a higher low to form. So whilst we're waiting for that higher low to form, how can we know when it's ready, right? How can we know when it's ready? Now, obviously, in this pullback, what you're going to see, let me just draw it. Let's draw it out. What you're going to see is obviously something like this, right? Let me put this up here. Let's draw some resistance to the left-hand side, make it a little bit more realistic. Got something like that. We've got our support over here, like so, and then what we're going to start seeing at this point is the pullback, right? This is the correction. So we're seeing something like this. Okay. And then something like that. There we go. So these are just like the bearish candles making the correction, right? So we've got the impulse up, correction down, and what we'd obviously like to see in terms of the candles is something like this. Alright, when you see something like that, that's a fairly good opportunity to start taking buys, right? I think we'd all agree. We've got a candle that's broken the high of the previous candle. You know, we can start looking at taking buy orders here. Stop losses could be below the low. First target is going to be back up at the high. If that's going to break, then if the trend's going to continue, that area should break. We should move up to the next point of resistance, so on and so forth. Okay? So I said I wasn't going to talk about candles, but that's typically what we would look to see in a break and retest trade with the trend, right? Flip the structure. Here's the low, last significant lower high. We flip the structure. This is now the new high. We're waiting for the higher low to form. It's formed. We take buys. Price goes up. But what about the structure? This is another thing that we can start to look at, because see inside these candles here, right? And let me kind of expand this a little bit. Inside these candles here, what if it starts to range? Then it starts to range. But there's no indication at this point that it's going to start to range. Like, we don't know. What this is doing right now does not tell us that it's going to start to range. The only time that we'll know if it starts to range is if price bounces back off the high, comes back to the low. Because then you've got two tests of the high, two tests of the low. Now you're in a range. But until that, it's not a range. Okay? It's not a range. If price decides to do something like this, it's just choppy price action. It's just choppy price action, that's it. Is this crypto or am I in the wrong class? Yeah, you're in the wrong class, Luke. So, other than just the candles, what you're going to see on the 5 minute, and it's something that I've been looking at, as I say, for a while, but only really started talking about on the streams towards the end of the year, is in these candles. Yeah, we look at the candles, wait for the support to form, but see on that 5 minute, see this pullback. See this pullback. This is what it's going to look like on the 5, right? It's going to look like something like this. Okay, it's going to look something like that. So just the same way that a normal trend works. Okay, we've got the low, got the high, lower low, lower high, lower low, lower high, lower low, lower high. So, ladies and gentlemen, what do you think I'm waiting on? If I'm looking to take a buy based on this section here, what do you think I'm waiting on? We've been talking about it all day. Think about it, guys. We've been talking about the structure the same way we've been talking about it over here. It's the same concept, right? It's the same concept. Let's see. Higher high, yep. Above resistance of range and region, nope. End of downtrend, I guess, yes. A sell then a buy. Anton, you're in the wrong place, buddy. Break of last significant lower high, perfect, Joe. Break of the higher low. Not the higher low, Robert. Not the higher low. Remember, we're in a downtrend. We're in a micro downtrend. This section here. So if I look at all of this, okay, and this is, where's my text? This here is an uptrend. Fucking hell, man, learn to type. This here is an uptrend, all of this. And then this here is a micro downtrend. Then if we're in an overall uptrend, what should we be waiting for the micro downtrend to do? Break of the last lower high, perfect. Break of the lower high, break of structure, break back above it, perfect. Okay, last significant lower high, excellent, yes. So that's exactly what we're waiting on. We're waiting on something like this. So it's the same thing with the whole impulse thing, right? We talk about the impulse being bigger than the correction. It's the same idea on that 5 minute. Because what that's going to look like on the 30 minute. Can I go further left? There we go. That'll do. So this big impulse right here, what do you think that is on the 30 minute? This candle right here. So then what you're doing is you're correlating the break of the micro downtrend with the candle, the bullish candle that supports the uptrend. What's that? How to identify the counter trend? We just have. We just have. It's formed resistance. Look at these bearish candles. You don't need to worry about it up here. That's the point. You're not looking at it at this point in time. Where's Anton? Right. See you in a bit, mate. See you in a bit. We're not worried about it up here. We're not worried about it here. We're not worried about it here because this is the level. It's this level right here, this grey area. That's where we're starting to look to take trades. So we don't need to worry about anything that happens before that, only what happens at that level. And if you're looking and saying, okay, we've got a strong bullish candle here, you know, we've engulfed the previous candle, it's got a higher low, it's got a higher high. What does that suggest on the smaller time frames? That suggests a break in structure on the 5 minute, which is obviously creating the micro downtrend. Why is it creating the micro downtrend? Because of these candles here, right? Because of these bearish candles. So then once we see the break of the micro downtrend, we're going to see a candle like this. And then what do you think is going to happen next? Delete all this, clear up the mess. Right? What do you think is going to happen next? We're going to see a slight pullback like so. And then up we go. What's that going to look like on the candles? It's going to look like this one created a lower wick like this and then flipped bullish and started to move up. and that lower wick is this little correction on the 5 minute. Does that make sense? Resumption of the uptrend. Perfect, exactly. Does that make sense to everybody? Let me know in the chat this little section correlating the micro downtrend with the uptrend and the candle itself to resume the overall move. Yep, makes sense. Perfect. Happy days. Any questions on it at all? If anyone has questions, feel free to ask them. If it's about support resistance and all that shit, guys, like fuck, baby pips. Matthew says, do your targets go perfectly on previous highs or lower to take profits a little before? Good question. So Matthew, typically the way that I trade is if I can get 10 to 15 pips a day, then I'm pretty happy. So naturally what I'll do is I'll secure some profits as the trade moves 10 to 15 pips into profit. Now it just depends on the size of the range, obviously. Not all of us, not every time we're going to get a range that's that big. So for example, this range, it's just random, obviously, but it's about 17 pips. Or if we move it down, let's try and we've got about 20 pips of a range. Which is, it is big enough to trade in, I guess. But, what I'd be looking for as this trade starts to progress is that once it goes to around 10 pips profit, I'm going to secure some profit at this level just here. And then what I'll do is I'll just move my stop loss to break even. I'll move my stop loss to break even, and then I can't lose, because the idea of the game is to make money, right? The idea of the game is to make money. For me, I don't really ever allow myself to have a stop loss larger than 20 pips. 15 probably. I'll never really have a stop loss larger than 15 pips because of the way that I trade. So, hang on, I'm getting put off. Sorry guys. So yeah, as I say, I don't take a trade, more than with a 15 pip, with more than a 15 pip stop loss. So risk to reward to me doesn't really matter. Again, I know there's a lot of questions going to be in here saying, what about your risk to reward, or why do you secure at 10 and blah blah blah. My job's to make money. I'm a full-time trader, so if I can make 10 pips to 15 pips a day based on my lot size, it's good money. Okay, so lot sizes obviously do come into it, because 10 pips for someone trading £500 or £1,000 isn't going to be a lot, because your lot size is likely going to be quite small. But then at the same time, you're not a full-time trader if you're trading 500 to 1,000. So it's all relative, right? But for me, if I can get 10 pips to 15 pips on my lot size, and I can do that 5 times a week, then I'm okay, which is why it sort of suits me. But the idea of what I do is, because it is pretty simple and it is relatively easy, or certainly is achievable for anyone if you put the work in to catch 10 pips a day. It works. You can definitely do it regardless of your account size, really. And again, if I'm risking 15 pips, if my trade starts to go against me, right? If my trade starts to go against me, then I'll start to scale out. I'll start closing positions before it even hits the stop loss. So therefore, I'm not going to lose as much as I risked in the first place, right? So let's say I had a 15 pip stop loss and I was risking, £100, right? And then it starts to move against me, and I'm in 8 pips negative, right? I'm 8 pips negative. I'll just start to scale. I'll close 50% of my trade, right? I'm going to scale out that position. I'm going to close 50%, right? And that's saving me on the loss. I'm then not going to lose the full risk, right? And that's how I always keep the risk to reward on my side. So the same way that I manage the positions as they are winning, I'm also managing the positions as they are losing. So again, for me, as long as I have a 1-to-1, it's, yeah, it kind of works for me. It worked for a lot of people, to be honest. And I don't lose a lot. You know, I probably win like 7 out of 10, 8 out of 10. I think it's more 7 now. It used to be like 8. Do you lose with the strategy? Of course, of course. Losses happen. You know, it's normal. It is normal to lose when it comes to trading. There's no such thing as a strategy that wins all the time. It's just impossible. But for me, this strategy works well. It works well for all the members. It works well for the guys that I've been teaching. It works well for the people that turn up to the live streams. It's the idea behind a strategy is to find something that is consistent, is simple to follow, and yeah, that's basically it. You know, as long as it's consistent, you know that even if it loses a couple of times, you're still going to come out on top the majority of times. And strategies are things that people need to put to the test time and time and time and time again. So whilst you might only be learning a portion of how I trade today, you know, a portion of how I trade, think about what you're learning on just this one call versus the 200 hours that I've got teaching people. So I've put hours and hours and hours and thousands of tests into my theory of trading. And yeah, I mean, that's why I know it works. You can't just, so someone's asked, where can I find the best strategy to make the most rupees? Like, my advice to you, do more, is quit. Honestly, because it's the start of the year and you've not really started yet, I would recommend that you don't trade. Because if that's the mindset that you're coming into this industry with, as to how do you find the best strategy, or what's the strategy with the best win rate, and blah blah, how do you catch the most pips, and blah 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 blah, you're not going to make any money in this game. So I'm doing you a favor by saying, just quit now. You should just stop. Okay? I feel like I was watching your 2020 Jan stream yesterday. Was I streaming in January? Oh fuck, it was. I think I was in Australia at the time though. Do you agree with what everybody's saying, that each trade is closely observed by hedge fund / bigger? I don't think so, no. I don't really think hedge funds and like banks are looking at me trying to take a break and retest trade it back up to the high. I don't think they give a shit. Banks and hedge funds do not give a shit about retail traders. They just don't. We don't have enough money. Like, they don't. Why would they care about your like 500 quid? Why would a bank and a hedge fund care about you with £1,000 or £500 or 50,000 in an account? They just don't give a shit. Do you know what I mean? That's like me being a millionaire. That's like me being a millionaire and then someone saying, "Can I pay you £50 for some advice, like, or to teach me forex? Can I pay you £50 to teach me forex?" Like, no. No, you can't. Do you have a 30-day money back guarantee? No, because what is the guarantee? I'm not guaranteeing anybody of anything. Sorry, I think Robert asked the question, sorry. By the way, this isn't a blue, whoever said what's the blue candle for, like, it's not, it measures pips. I'm trying so all the guys who know me. There's a lot of new people here today, which is nice. But all the guys that know me here, fuck. Do you know how hard I'm holding it in? Like, I know you're sitting behind your screen just now going, you're doing a good job, man. Like, fucking hang in there, bro. Hang the fuck in there. Know that you draw the 4 red candles in a new example that you put second candle to be green, and then the rest of the candle. How would you handle a buy? I'll read that one more time, Robert, and see if I can figure it out. In the new example that you put, second candle to be green, so this one, and then the rest of the candle be red. How would you handle the buy? If my question made sense. Well, if the next candle closed red, like this, I would close the trade. If the next candle closed bearish, then I would close the trade, because I'm only interested in candles closing bullish. When does the lesson on how you trade start? The 11th of January. Can you please give us an example of how you close your trade if the price goes against you? What candle should look like on what time frame you follow? Yeah, sure, okay. You've not joined my membership as well, by the way. And please don't. Please don't. I don't want your money. Can Forex be used as a side income? Absolutely. Absolutely. I think it's better to be used as a side income. Too many people are trying to make Forex their main income, and that's just too much pressure. What session time does it fail most? I've not really tested when it fails, to be honest. I've only tested when it wins. And I trade the London session, so it's relatively consistent in the London session. But remember, it's price action, so it happens every session. There's no session that it's any different. Shouldn't the green candle be... Oh, look, you need to go, man. Sorry. See if there's any mods that are in here. Can you just keep... See, look, you just keep them out. Any mods in here? Oh, Dylan's here, right. Dylan, I'm going to make you a mod. Congratulations. Dylan, you're now a mod. Do you mean you're holding back from telling us more strategies? I'm going to backtest the strategy in 2008. What advice could you give for backtesting? I'm holding back from telling you strategies. I'm not holding back. This lesson's just specific to structure. I'm just giving everyone like a little taster session on how to look at structure and how to analyze it and correlate it with the way that you trade. I'm not sitting teaching you guys like this foolproof strategy that fucking start this tomorrow and you'll start making millions. Do you know what I mean? Like that. That's not how the market works, I'm afraid. If it was, I think a lot more people would be trading Forex. But I'm just teaching you guys how I trade structure. And it's something that's very rule based. That's the difference between the way that I trade it versus the way that others trade it. You know, mine is a lot more rule based, whereas others, I believe, is far more subjective. And I feel like if you can have more of a rule based plan, like a black and white plan, when you I don't want to say objective because that's facts, and that there's no such thing as a fact in Forex, but something that's more black and white, and that's the way that I trade structure. It's just a very simple, easy way to do it, because a lot of people sometimes come to the market and they don't know what the direction is. That was really the main thing that allowed me to learn the way that I trade structure. You know, I used to learn off people. I did baby pips. I did a few courses. I did a course from a guy that traded swing, and he's very, very good, but his course is very, very subjective. And 50% of the group look for buys, and 50% of the group look for sells. So if you've got 50% of a group looking to take buys and 50% of the group looking to take sells, then 50% of your guys are going to lose. Right? Like 50% of your team are going to lose because the way that you teach is so subjective. Whereas my group, when we win, 80% of us win. Genuinely, like 80%, because everybody, or at least the majority of my group, they know the same direction. They're trading in the same direction. So whilst in these other groups, 50% of people are selling the pound and the other 50% are buying the pound, in my group, 80% are buying and 20% are selling, because we have a very unique, conservative and rule-based way of looking at structure and being able to determine the direction. And I think that's the thing that everybody makes so difficult, is when they come to a chart, let's just say EJ, right? So let's just say you come to an EJ chart, and what you're trying to do is you're trying to determine the direction of this chart. Mods, do more as well. He's going to be timed out. So anytime, do more, or the other Bitcoin kid speaks, just time them out, please. I don't have time for questions like that. I'm here to help everybody. So yeah, so people will come to this chart and they'll be like, am I looking for a buy or am I looking for a sell? And what you start doing is you start planning both, and you're like, okay, well, maybe I could try and buy it from this support, you know, but then it might bounce below the support, and if it does that, then I'll sell it, right? But then it looks quite nice. If it forms a support here, then that's like a higher low to here. So then I could draw this trend line, and then price should go up, right? So many people do that, guys. You've got no idea. So many people come to the chart and think like that, and that's the way that they trade, because they've not been taught a way to start from scratch, and they've not been taught how to look at the chart based on the weekly, right? Look at this. This is how quickly I'll analyze. You're not going to understand any of it, okay? Just so you guys know, you're not going to understand a thing. Just, this is how quickly I could do it. This is my approach. Weekly chart, looking at the previous week's candle. Okay, so previous week's candle to me suggests that it is bearish, but it's not that strong bearish. Has got a strong rejection, but look at the body of the candle. It's pretty small. The wick is larger, so therefore there was a lot of buying pressure throughout that week. The candle did close bearish, so I would consider that a weak bearish candle. And what I mean by that is that the direction is bearish on the weekly, but it's not with a lot of momentum. There's not a lot of momentum to the downside based on that weekly candle, but I still know that it is downside. Then what I'm going to do is I'm going to look at the daily structure, and I'm going to say to myself, okay, so where can I identify a potential downtrend? I think this section right here is a potential downtrend, because we have the highest point up here. Here's the last significant higher low that created that push. There's the drop below it. Perfect. Now we're bearish. Okay, now here's the lowest point of the downtrend. Perfect. Where did that push come from? That push came from right here. So what that means is, if price gets above this level, daily's flipping back to bullish structure. So as long as we stay below that, we're still bearish. Did we stay below it? No, we did not. Price pushed up from this level right here and created this new high. So what that means is, okay, going too quick? Guys, I told you I'm going to go quick. You're not going to understand it. This is just me showing you how quickly I can analyze and know which way I want to trade. So the daily to me has flipped above this area. Perfect. Bullish. Okay, excellent. So we have this high. There's the push that created that high. There you go. Last significant low. Daily's bullish as long as we remain above this level. Let's delete that all and jump onto the 4 hour time frame. Jumping onto the 4 hour, what can we see? Alright, well we know that this was that downtrend we saw on the daily. Let me see the lowest point. Perfect. Lowest point right down here. Excellent. Where did that push come from? Right here. You see, because we have this little pullback in here. Got this 2 candle pullback. Perfect. 2 bullish consecutive candles. That's what I'm saying. Okay. Needs to be 2 consecutive bullish candles to consider it a pullback. There we go. So as long as price respects this level, we're bearish. What happened? Price has broken that level. We have created this new high. And then where did that push come from? Probably here. So that means that definitely here. We've got that 2 bearish candle. Excellent. So here's the low. Price is bullish as long as we respect that level. So what's happened? Remember we spoke about it? This is like a 4 hour to 30 minute example, but we spoke about the 30 minute to 5 minute example. What's this, guys? What is this? If the 4 hour is still bullish, what is this on the 4 hour? Micro trend. So we know that the 4 hour is overall bullish in its structure, but here's a little micro trend in between it. So if we have this low here and this is the little pullback, then what do we expect? Price to break above, create the impulse, give us that impulsive leg first to break the micro trend to go with the overall trend. Then what happens? Pullback, support form, up we go to continue what? The bullish 4 hour trend. Excellent. Did we form a new high above this one? We did, straight up here. So this then becomes, let's move this little circle up here to the high. Perfect. That's the new high. Where did that leg come from? Right here. You see these two bearish candles? That's a pullback. Perfect. So this is the last significant higher low. As long as we respect that level, the 4 hour is going to remain bullish. Perfect. So the 4 hour is bullish. Let's now go down to the 30 minute. Down to the 30 minute to work out what the direction is on that 30. Let's see. Where's the highest point on the 30? We know that this is an uptrend. We know that we're in an overall uptrend. So where's the highest point of it? Let's see. Perfect. Right up here. Here's the highest point. Where did the push come from? Right here. You see these two bearish candles? That's a pullback. So right here is the last significant higher low. So what happened? We broke that. We created a new low. So this here comes down to here. We broke the last significant higher low. Where's the last significant lower high now? Up here. Price must get back above the high to break the downtrend because this is the leg that created the new low. Did we break it? No, we didn't. Formed your resistance? Down we go. Alright, we formed a new low. Where did the push come from? Right here. This is now the last significant lower high. Okay, perfect. So we must respect that level. Pull back. Did we respect that level? Yes, we fucking did. What happened next? Down we go. We created a new low. Alright, where did that push come from? Let me see. You could argue it came from here, you could argue it came from here, but for the sake of the trend, let's call it here. If you want to call it down here as well, you can do. Did we break that level? No. Down we go, creating a new low. Where did the push come from? Right here. So we're bearish on the 30 minute as long as we respect this level. How's that? Okay, good. Cool. So what we know is that we have a weekly time frame, a weekly candle that's suggesting sells, not strong sells, weak sells. So there's not as much selling bias as we would have hoped based on that weekly. Okay, but we have a bullish daily time frame, a bullish 4 hour time frame, and we have a bearish 30 minute time frame. So what does that mean? Right? We have two time frames suggesting sells, we have two time frames suggesting buys. Okay? So we have a tug of war. Those two guys are in a fight. Alright? Or those four guys are in a fight. We've got two at one side, two at the other. It's a tug of war. Nobody wins. 2v2. So what does that mean? We must wait for one to flip. So if the 30 minute is the smallest time frame that gives us the most information, it's probably best to trade on the same side as that and wait for that to flip. So if we identify that this here is the low, this here is the last significant lower high of the 30 minute downtrend that is within a daily and a 4 hour uptrend, what must we wait on? Impulsive leg, pullback, support to form, continue the drive up. And then what do you have? You have three guys at one side of the rope, and those three guys are going to be the daily, the 4 hour and the 30 minute against the weekly that is on the downside. Alright, so we've got the buys based on daily, 4 hour, 30 at this point once we get the flip, and then we've got the weekly suggesting the sells. Who's going to win the fight? You've got a 3v1 now, so it's likely going to continue moving up, and that is called directional bias. Okay, that is directional bias, and how we determine it, that is exactly how I determine it. So all of the structure that I taught you earlier, all of the finding the high, last significant lower high, blah 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 blah, all of that, that is what I do every week and every day to identify the structure, to identify what the directional bias is. And once I know the directional bias, whether that be bullish or bearish, I then know which way I'm trading for that week or for that day. Okay? So, anybody got any questions? Whew. So is structure important? Nah, mate, just toss a coin. Just toss a coin. I like how you guys caught that micro trend. I think that's really good. If you caught that micro trend part on the 4 hour, good job. I'm happy. What do you do when it's in a range? Avoid it. All this up down got me confused. Martin, your name's Martin XRP. You should be fucking used to up and down by now. Like, guy's name's XRP and gets confused by up and down. You still cracked on Fortnite? Nah, man. Appreciate the free knowledge. Such golden nuggets for the ones that catch it. Nice one, Matthew. I'm glad you enjoyed it, man. Thank you for the useful stuffs. All good, man. More stuffs to come. Thanks, man. The simulation was amazing. Really helped me to open my eyes. Excellent. Excellent. That's good. Where are you from? I'm from Glasgow. Glasgow in Scotland. Can't believe it took so long to get this. That's good. You went on some course to learn all this? Believe it or not, no. A lot of the courses that I took were just the kind of generic support resistance, Fibonacci and indicators, stuff like that. The structure thing, I sort of just developed myself. Like I said at the start of that explanation, a lot of people used to struggle, and myself included, used to struggle when you came to a chart and you didn't understand the direction. I think if you come to the chart not understanding the direction, then it's very difficult to try and plan a trade. So in my head, it was a matter of how can I start to identify which way the market is moving overall, and I'll just trade on that side. And that's kind of how I did it in my back testing and in the studying and just all the time on the charts. It was that pattern that I showed at the start of the stream, the one where you see an uptrend like this and then you see something like this. It was this pattern here that kind of got me, because as I say, a lot of people start to look for sells here, right? Like, a lot of people start to look for sells because, you know, you're seeing this lower high and then you're seeing this lower low and then you're seeing this lower high again, and then everybody draws the trend line. Like, I don't use trend lines anymore, but then everyone will draw that trend line and they'll be saying, alright, well, I'm going to wait for this part here to tap the trend line and then drive down. But what actually happens is it continues to move up and create new highs, and was always wondering why that happened. And then I realized it's because, well, if this is the highest point of the trend, then this is the leg that created it, so this one here must be more significant. And then what I would also see sometimes is that price would continue moving down. You know, it would maybe test the trend line, for example, and then start moving down, but it wouldn't break this area here. It would, like, respect it, and then price would continue to move back up again. and it would start breaking that little micro trend that I spoke about as well. It would start breaking the micro trend and then pull back to continue the overall move. And believe it or not, at no point during this whole drawing that I've just laid out, at no point was that bearish. Like at 0 point of this was it bearish. It was always bullish, even though this little section here looked like it was bearish, and that's what tricked everyone into taking sells. Whereas I would let it create its drive down and then start loading up on buys because it still respected that level. It still respected the last significant higher low, and I just found that consistently that was the case. And as long as I can try and find, find areas that make sense, because like I say, it's all well and good understanding the trend and understanding the direction, but placing the trade's a different game. And you want to be able to place trades in an area where price action isn't choppy. You've got some clean candles to the left hand side. You've got a clean zone, a big zone, 20 pips or more, to try and grab your 10, your 15 and get out. So it's all well and good understanding the direction to trade in, and the trend and the structure and all that sort of stuff. But sometimes this little example over here, right? Like sometimes this over here doesn't formulate that way. It doesn't always like this. These bearish candles on the 30-minute, right? These bearish candles on the 30-minute don't always formulate like this on the 5, right? They don't always do that. So you need to find another way, or you just miss the trade. You just don't take it if it doesn't do what you want it to do, and that's the whole point of trading, And once you start to realize how the market operates, and for the majority of the time you're correct in its direction, like 90% of the time I'm on the right side of the market. I might lose some of the trades, but I'm on the right side. I'm on the right side of the market the majority of the time. And sometimes I'll miss the trade. Sometimes my stop loss might be a bit too big. So I know the move that's likely to happen, but the stop loss is too big. And I don't take it. And that's in my rules. And even though it might play out, I didn't get anything from it because it was against my rules to trade with that big a stop loss. Or let's say inside the 30-minute candle there's a bearish 15-minute candle. I might not want to take that trade because 15 minutes worth of my 30 minutes of data, the sellers were in charge. So I might not want to take it based on that. So it's all of that sort of stuff comes into it as well, and that comes into it with experience. But how do you gain experience in trading? Everybody's always asking, how do you gain experience? Spend the time. Right? You can't just go and learn a strategy and then all of a sudden, boom, I'm fucking profitable. I make money every day. That's not how it works. You need to understand the strategy. You need to understand at times where it'll work, and times where it might benefit you to just sit out and let it play out and learn from it, whether it works or whether it doesn't. Or you need to be experienced enough with price action as a whole to find ways around it, right? To find, even though it's not giving you your exactly what you want to see or ballpark what you want to see, you can still find a way in, and that's from experience, right? But by learning something like this, by learning this style or any style and just repeating it over and over and over and over again, you're going to gain experience in that technique, in that method, and you'll start to be able to find ways in that work in certain scenarios. And it's all just down to learning price action. But starting with a clear set of rules, like I've tried to teach today with regards to the structure, is, I believe, very important to being able to even get to that stage. You need to be following something to get experience. You can't just be following Forex. You can't just spend 6 years trading Forex and then be like, I'm experienced. Doesn't matter how much time you put in, that doesn't make you experienced. You need to understand a specific style. You need to understand price action. You have to be consistent in it. If you're not consistent in it, then you're experienced at losing. And nobody wants to be experienced in losing when you're 6 years in. If you want to be experienced in losing after a year or maybe 2 years, that's absolutely fine. But you don't want to be 6 years into your gig and your experience is in still losing, you know. Uh, Gotta get off. Appreciate your time again, Matt. All the best for this year. See you on the streams. No worries, Joe. Have a good day, man. If you came to the chart and it's 2v2, would you not trade the day until one of them? Good question. So there are still ways that you could trade the 2v2. There are still ways in which you could do that. But that information I'm not going to give on the stream. On this particular one. I'll talk about it on the lives though, like, because that's stuff I still need to do. This is different because I'm not live trading. If I'm live trading, then I typically explain my thought process like all the time. Like I'm always telling you guys. But there are still ways to do it in a 2v2. But if we're trading with the trend, we obviously want the bias to be 3v1 or like 4v0. That was great. Thanks for the explanation. All good, Rohan. No worries. How do you determine your lot size in relation to your account size? And what percentage are you risking per trade? See, that's, again, that's nothing to do with me. Alright, that's more of an individual thing. That's a trader by trader kind of thing. If you can't calculate risk management, if you don't understand what lot size to use in regards to your account, then there's a problem. So it's simple mathematics, right? So if you're risking 1% of your account, you must work out what 1% of your account is, okay? That could be £20, that could be £100, that could be £2,000, that could be whatever it is, okay? And that's what you're risking in terms of the monetary value, which is then divided by the size of your stop loss, which will then give you your lot size. Like, that's simple mathematics. I don't teach that shit. That's like baby pips kind of stuff. Do you trade? And what I risk per trade doesn't matter to anybody else. But it's typically around, it's anywhere between like 1 and 5%. I used to stick to 2. I kind of went a little bit balls out towards the end of the year. Or like September, October time. Do you trade US 30? I don't trade US 30, bud. Is it more manipulated? I don't know if it's manipulated. I think it's just, I just think it's influenced by a lot more things, is maybe the best way to look at it. You know? It's like Chinese whispers, and there's like 20 guys playing, you know? Or there's like 100, and everyone's saying something different. And you're like, what the fuck? You know? It's kind of like that. I don't know. I just feel like it is influenced by a lot more stuff, which is maybe why people think it's manipulated. But I don't trade it. I don't really look at it. I know I've got it on my chart, but I don't watch it like ever. What's your goal in 2021 in regards to lot size? Yeah, I don't think that matters, man. I think you just got timed out for that message, to be honest, which is fair enough. Again, like my lot size, my account size, like these things don't matter. My account size is going to be significantly smaller than what it was in 2020. Genuinely. Like significantly smaller. for reasons in which I don't need to share on the stream. Um, GJ and EJ are good for a London session? Yes. Oh, you're answering someone else. Which pair do you think is the best for me? I can only operate in the afternoon at London time. Yeah, so like GJ would be good then. How do you become a profitable trader and get out of the up and down cycle? I don't really know what you mean, Jonathan. Like, if you're a profitable trader, you're still going to take losses. Like, you're still going to take losses. You just need to make sure that you take more wins. That's how you become profitable. Is your lot size consistent, or does it vary depending on the stop loss size? Yeah, of course. It depends. It does vary. I know a lot of people like the idea of using a fixed lot, and I used to. I'm kind of against it because you might use a fixed lot on a 10 pip stop loss, but then what about when you have to use a fixed lot on like a 15 or like a 20 pip stop loss? You're doubling your risk. So yeah, I definitely vary mine because again, like some trades you're going to feel more confident in than others. Um, so when you feel more, when I feel more confident in a trade, or I feel confident and I've already taken some wins for the week, I'll risk kind of like the 3 to 5% mark. But then if the stop loss is quite big, then it'll be 3. But if the stop loss is quite small, it'll be 5. Right? So that's kind of how I do it. It's all based on the trade itself. But I typically teach people to risk between 1 and 2% and split it into 2 separate trades or 3 separate trades. Excuse me, hang on. Sorry, COVID. I don't have COVID. But I teach people to split their risk and be consistent with it. But I'm experienced, so I can. Yeah. The secret is to minimize our losses. 100%. Yeah, absolutely. I think if you can keep your losses small, stands you in a better position to win. Or consistently make profit, without a doubt. Guys, keep asking your questions. I'm going to head off in the next 10 minutes, so. If anybody has any questions based on structure and what I've covered today based on structure, then please just let me know. Can you go over the gold trend? It's still on downtrend, or did it break the daily previous higher high? Gold. Oops. Not yet. Not yet, because if this is the high of the uptrend, this is the push that created it. So price has to get below here, which it did. So that was now the new low of the downtrend, and that push came from here. So if I zoom in, and this is the downtrend, and I go from the bodies to the top wick, like this, then price needs to close above this grey zone, and then that flips the structure. Okay, so again you can see here price moved up, still bearish, higher low, still bearish, even though people are looking at this and saying, you know, oh, I'm going to start taking buys. You're not with the trend at that point, and even though you're seeing this little series of, you know, it's kind of what we looked at based on the based on the 30-minute when I was doing the example earlier on, and how people see something like that, then it's testing for the third time on the trend line, and you draw the fib, and you're like, oh, 61.8, and then you start loading up on buys, and then what happens is it breaks through. You know, it's respected on this occasion. Normally, or the majority of the time, what's going to happen is this here isn't going to hold, and it'll just burst through. Um, my opinion is that I still feel like gold is bullish overall, and that this here is more of a correction of this massive push up. So I feel like this is kind of like the micro trend, if that makes sense, and that there is an opportunity for it to move up. The problem is that the structure flipped on the daily by this low here. So if I'm following the rules, even though in my mind I want to say and I believe that it is buys, the structure is suggesting at the moment that it sells until we close above this grey zone, and that there's still opportunities for us to form resistance here and continue moving down, which will be, as I say, with the overall daily trend at this moment in time. So to answer your question, it's not yet broke to flip bullish, not yet. What did I need to know in order to trade pound dollar? I mean, I feel like if you're asking that question at the end of an educational stream, I hate to be the bearer of bad news, but I think it may be time for you and your trading career to part ways. Could that daily low on gold be a possible false breakout, or rather, would we consider it a false breakout if it breaks that structure high, like you explained? Jesse, to be honest, I don't really. I would say no. Like, I just don't. I don't believe in false breakouts. I just don't fall. When it comes to structure, I don't really believe in like in false breakouts. Like, it is a break of structure. It's simple as that. And a lot of people are going to wonder, like, oh well, why did price stop here? Like, why at this point? Why at this point right here did price stop? And if you look to the left, you can see that it was previous resistance, previous support. It's been support and resistance in the past. So I don't believe, even over here to the left, it's proven to be a little bit of resistance. I just don't, I just don't see like false breakouts like that on the daily. I don't really believe in them, to be honest. Because if I was to draw a zone based on the weekly and I was to go from here up to this wick, like that, this is basically just like a retest. Do you know what I mean? See? So. Okay, so you wouldn't trade the setup if it breaks. The set breaks both bullish and bearish structure. Well, it's not going to. It can't. If it's going to break both, why is this guy like have about 50 different accounts, man? Why do you have like 50 different accounts, like fucking spamming your IG in the chat? Go away. What are you doing, man? You wouldn't trade. Okay, I don't really understand that one. You would ignore the bearish break and focus on the bullish structure break, taking into account that gold made. Yes, in this scenario, yes, that's what I would do. I would understand that it's still bearish, but again, like, what are we seeing here? Like, what are we? So if let's say this whole section here is bearish, what else did we speak about? And how to identify when a continuation of a certain trend might keep moving. Like, at what point? What do we get inside the overall trend? Let's see if you remember, Jesse. I'll help you if you don't remember, but let's see if you remember. We spoke about it a few times today. So inside the overall trend, we have a Jesse, hurry up. Oh, God almighty. Microtrend. Jonathan, thank you for saving the day. Yes, so we have a microtrend inside the overall trend. And if the overall trend is bearish and this here signifies the microtrend, then what do we wait for? A break in the microtrend and then a pullback to continue the overall downtrend. Overall trend is bullish, yeah, but inside the overall trend. And the overall trend isn't bullish, we've identified it as bearish, Jesse. We've identified that it's bearish. Oh, hang on. So if the microtrend is the bullish one, the overall daily trend is bearish. It broke below here. It's bearish as long as it stays below here. So it is still bearish at this moment in time. Okay. And inside the overall bearish trend, this is the micro. Okay. So we needed to form a resistance, break below, to continue moving down. Right? And then that'll be a signal that, okay, now we're ready to start, selling off again. Or what will happen is price will break above the last significant lower high, which is here. It will continue to push up, create a new high. That new high could be up here, which becomes, as I say, the new high. Where did the push come from? The push came from right here. This becomes the last significant high or low, and then as price breaks back below that low, we become bearish. Now, a lot of people will say, oh, but that's going to take ages. That's going to take so long. Remember, you're trading 4 time frames. You're trading 4 time frames. It's all about directional bias. Find your 2v2s, find your 3v1s, find your 4v0s, and just trade with a directional bias. Okay. And this is only daily. Remember, like you might find stuff on 4 hour as well. So if you're looking at something like that on daily, I'm heading off in like 2 minutes, guys, just so you know, don't worry. Find something like that on daily, jump onto the 4 hour, and then you're saying, right, okay, so 4 hours not looking great because of all of this choppiness. So this is kind of like the high, kind of broke that high here. This is still the highest point. Price needs to get above there based on the 4 hour. If it doesn't and it starts breaking below these lows here, good chance it's coming down here. And once it gets below here, it's broke the daily micro trend. And then you would expect it to continue moving down like that again. And this was just your micro trend correction. That's it. Alright. That's been 2 hours. Oh, that was a good stretch. I'm going to head. Guys, it's been a pleasure. Can I just have some security? I know there's going to be a couple of trolls. I get that. There has been today. People spamming their IGs and just being outright idiots. It's life, it happens. But for those who were here to learn and here to pay attention, for my peace of mind that I was doing the right thing, can you confirm that you learned something today? Let me know. Do you feel now that walking away you understand structure a little bit better and how to have some directional bias? Just let me know. If you didn't, then my apologies. I thought I explained it as well as I could. But do you feel like today you've learned something in regards to structure and direction? Yeah. Alright, great. That's good news. Oh, they're the best sweets ever. Okay. Perfect. Well, I'm glad you enjoyed it. Um, it's been good to come back. 2 hours. I didn't expect it to be 2 hours. My mum was asking me, was like, "How long are you going to be?" And I was like, I don't know, half an hour. Never. It's never an hour. The video is recorded, yes, so you can go back and watch it. Um, Anybody else, I would recommend, if you want to understand a little bit more about directional bias, then my advice would be to watch some of the Sunday webinars that are on the YouTube channel. I would definitely go through them if you haven't already, because that breaks down basically from start to finish how I'm looking to trade. So definitely go and have a look at the Sunday webinars and any of the educational videos. There's a lot more in there. Today was just very specific to structure, mainly so that people can come to the market and understand, you know, which way they want to trade. All right, just to be on the right side. Being on the right side puts you in the best possible position to win, and that's what I was trying to accomplish today. So I'm glad that a lot of people did. And for Mr. XRP, who won't leave us alone, it's nothing to do with ego. Do more as well. The guy who has to retire. It's nothing to do with ego. I don't have to be here. I want to be, and I want to help, and I want to show people that there is a simpler way of anticipating structure and understanding structure. That's my job. That's what I set out to do. If in the meantime we have some unappreciative people in the chat, or people who are just slowing other people's learning curve by being a distraction, you will be removed, and that's what you and others have been today, and that's why you're removed. That's the process. If you don't like it, don't come back. I don't need you here. We don't need you here. We'll continue to learn without you. It's not a bother. All right. So, guys, if you liked the stream, don't forget to give it a like. Nearly hit 100 today. We got a decent amount of viewers. I think we got about 150 at its peak, so I'm pretty happy about that. It is again the 3rd of January, so really appreciate you guys taking the time out your weekend to come on and have a look at the charts with us and learn some bits and bobs. Really appreciate it. We will be back to trading from a week tomorrow, so it'll be the 11th that we're back, and yeah, really looking forward to it. So I will be on the lives. Won't be long till we're back. I'm going to be doing some Instagram videos. I might do another YouTube one before we come back. We'll wait and see. No like from me. That's okay, Anton. You dislike it. That's fine. You dislike. Press dislike. That helps get me views as well. So just dislike it. And the more you talk, the more people watch. By the way, so the more you spam shit, the more people come to this stream. So just keep doing it. It's fine. You're helping me. Why not tomorrow? I just wanted a longer break, to be honest. There was obviously that flash crash a couple of years back, so I'm not really interested in trading at the moment. So I'm not going to come back to the streams if I'm not going to be trading, and I just want to spend a little bit more time chilling out, playing some golf. I've been isolating for the last 10 days, so I come out of isolation tomorrow and I can go play some golf, thankfully. I just got a membership at Christmas for the golf, and I played one game and then got stuck in isolation. So I've not been able to play over the holidays, which sucks. But yeah, I'm going to be doing that for the next week. And I'll make some Instagram videos as well, because people have been asking some things about pairs to trade and sessions to trade and risk management, and some different bits and bobs. So I'm actually going to do some Instagram videos and shit, which will be great. So thank you all very much for watching. Really appreciate it. If you've not already liked, feel free to. If you've not subscribed, feel free to. You'll get notified when we post anything or when we come on live from next week. And make sure you ring the bell, because that's what gives you the notifications. And I hope you all have a great weekend for the rest of it that you have. And yeah, I'll speak to you all very soon. Alright? Trade safe in the meantime for those who are trading. Okay? It's early in the year. Trade safe. Don't do anything stupid. Speak to you all soon, guys. Bye for now.